All right, we're live. Hey, everybody. Happy Friday. It's Greg Rand. I'm the Chief Strategy Officer at Renters Warehouse, and we're doing something for the first time today. Hopefully it works well. We're doing a Facebook Live Q&A show. I've got a long and storied background in the real estate investment space, and it's my hope that I can add some value today by sending you off into the weekend with some of your real estate investment questions answered. I'll give you a little background. People are starting to show up here, which is cool. So what we're going to ask you to do is to put your question, brief question, and your phone number in the comments because we're going to call you. I don't know if you've ever seen Gary Vaynerchuk's show, Ask Gary V, but he pioneered some really cool techniques that we are shamelessly stealing and borrowing. He wouldn't mind. So we'll call you on the speakerphone and you can ask the question live and I'll do my best to answer it. To give you a little idea of why you can ask me and feel like you might get some interesting and valuable information back. I've been in the real estate business for going on 30 years now, 29 years. So my whole adult life and half my childhood, my mom was in the real estate business. So I worked with her when I was a kid. But I had a lot of opportunity throughout those years in different roles that I played to work with some really senior level and a lot of entrepreneur level investors. And I learned at the knee of a real serious creative commercial real estate investment guy named Paul Adler, who's going to join this broadcast one of these weeks when I give him enough notice. And he was an adaptive reuse turnaround specialist at taking properties and envisioning what they could be. And I was able to learn a ton from working with him and from working with alongside him with a lot of his clients to see what they did right and what they did wrong. All right. To observe. I've discovered over all these decades that I recognize patterns. And so I've got experience myself, but really the experience that I'm channeling here today is from all these people that I worked with over the years and witnessed over the years and saw these patterns that they kind of follow that are pretty distinctive. And when people deviate from them, they tend to make mistakes. And so 10 years ago, after having a couple of decades of experience in commercial and residential real estate up in New York, we launched this company called Own America. And that company was dedicated to Wall Street and professional investors in the single family market. And so then I got a chance to see as Wall Street came in for the first time, real professional people, professional analysis being done. We worked with literally every one of the biggest investment funds. We did a little work with some of them. We did a lot of work with a few of them. But any work we do, they have to tell us what their plan is, like where they want to buy, what they want to buy. Our job was to help them analyze markets around the country and find properties and markets that worked for their requirements. And so I got to see under the hood at pretty much the entire Wall Street driven trend. If you know anything about this, you might have read about it. Maybe you've experienced it. Wall Street, about 20 Wall Street firms raised billions and billions of dollars starting about 10 years ago and began buying rental homes around the country on the backside of the housing crisis in order to create a lot of rental stock for all these families that were going to lose their homes to foreclosure and short sale. And it gave rise to an entirely new asset class, commercial real estate asset class, which was residential homes that were actually owned by an investor and occupied by a tenant. And so those companies, we sourced properties and analyzed markets and worked with them in their process, sold thousands of houses for them, and then along the way created a system by which they could sell portfolios of rentals they decided to sell. So now follow this. When they were doing all their analysis, we got to see and be part of that on what they thought they wanted to buy. And then with this, they decided they wanted to sell things. Usually it was because one of two reasons. Either A, they made a mistake and they wanted to pull out of that market or that price point or that neighborhood. So we got a chance to see what those big brains decided was a mistake. And they don't go on intuition, okay? They go on real numbers. So, and the second reason why they would sell is that they did so well, there was time to pull some money out of that market and then double down someplace else. So it's just been a really great 360-degree view on investment in America in general, with a heavy concentration lately on single-family rental. So the reason I'm here and the reason I'm not the CEO of Own America anymore and I'm the Chief Strategy Officer of Renters Warehouse is that they were kind enough to buy my company and put me in this position. And what I love about that is that my passion has always really been with small investors. I loved working with the big ones, but I like more. I like it better working with small investors, because what it means to people in the small investment space is that they get an opportunity to like secure their future, right? So when I work with somebody who works for a big investment fund, it's their career. When I work with somebody who is buying the properties and Renters Warehouse is managing it for them, what it's doing is setting up their personal legacy, making it so that sometime in the future they can have complete financial peace of mind because they've built a portfolio of rental homes that are paying them an income and becoming valuable, more valuable every day, which pretty much happens. So that's where my passion lies now. Renters Warehouse has got 15,000 some odd customers, most of whom own 1 or 2 or 3 homes. And we're bringing the best of what we learned on the big scale to everybody, so that more and more and more people can basically avail themselves of the power of this asset class. That's the idea. So today's topic is picking winners, which has been a specialty of mine for a long time now, where we are able to apply a certain philosophy that I'm going to share with you now. If you have any questions, please put into the comments what your question is. Brief, one-liner. It could be about a market. You might want to know about Tallahassee, Florida. What do I think of that market? It might be about an investment situation you're considering. It might be that you're brand new and you're trying to figure out how to get started. And it might be that you've heard that there's a big recession coming next year and you think you might want to sell, and what do I think of that? So I'm really excited to answer questions live. Again, your question and your phone number, because Austin is going to dial you up and then put you on speaker so everybody can hear us chat and interact on that. Okay? All right. So what I want to do now is give you kind of a taste of this. I think it's really, really helpful to see the real estate market in context. And a lot of people don't understand that if you don't see the real estate market standing way back, if you're not standing on the moon looking at the market, you're going to miss the trending. And so what I always do is focus on what the long-term trending is and what it tells me about what might be coming in the future, and then what's happening now that might be changing that trajectory, right? So this is a really interesting chart that shows you the last 50 years home prices in America, all right? And what you see here is a long period from 1968 all the way through 2003, where it is an incredibly steady, gradual trajectory up, okay? You got a couple of flat points here in the early 80s and a flat point over here in the early 90s. And what's interesting is that a lot of people will talk about these as the real estate crash of 1981. It was a real estate crash for the real estate business because interest rates went to 18%. There were lines to buy gas. It was a bad economy. And the business of real estate had a lot of trouble. But the market of real estate didn't. It just flattened out a little bit. All right. And I've had arguments with like very experienced people in the real estate business. Says, no, I lived through it. It was a bloodbath. It was terrible. It was a bloodbath for your company, your industry. It was a bloodbath for the industry, for the asset class, and the numbers don't lie. Again, early 90s. Oh, what a bloodbath. Not really, a flattening out. But then you have the ski jump, right? This was the housing boom that started off reasonable and then got unreasonable. And then what you see is the housing bust. And what's really interesting about that is that as soon as the bust met the line, and follow my arrow here, you see where it deviated, you see where it came back to, right? Isn't that interesting? So we've got Democrats and Republicans, wartime, peacetime, high rates, low rates, good economy, bad economy, cats and dogs, doesn't matter. The housing market chugs along until the human intervention of the early 2000s, where they wanted to spur on home ownership and they loosened up all the lending standards. And a lot of people who could afford a $300,000 house got a $400,000 blank check from the bank, and off they went and spent $400,000. It drove prices up artificially, and the housing market said, no. It mauled everybody. I use the term maul because it's kind of funny. If you've ever seen the movie The Revenant, you know Revenant, that's Leo DiCaprio. There's a scene where he gets beaten up by a grizzly bear, and I mean like beaten up, stomped on, bit, his head chomped on. It's like 11 minutes long, this scene. And the bear actually takes a break for a while in the middle. Remember that? The bear takes a little break and then goes back to chewing on him a little bit and scratching him up. That's what the housing market did to all of us. And then it went back to where it wanted to go. Now, are we a little bit high right now? Has the market gone up too high? Maybe. All right. But I don't see any reason why it would plummet, because none of the circumstances that created this bubble last time are actually happening now. All right. But I want to go into individual markets. These are charts that come off of the Renters Warehouse marketplace, which is available at renterswarehouse.com for free. All right, you can go there anytime you want, open a free account. You can put properties in there that you want to analyze, that either you own and you want to see what they're worth and how they perform. You can put properties in that you're thinking about buying. You can create a fantasy portfolio. We took all the analytics and the data that we learned how to, we really got mastery around this data. We learned how to use it and how to visualize it, and then built what is going to feel a little bit like a video game for you if you're a real estate junkie like me, okay? You go in, you put a property in, you're then able to go in and see market data, price performance, and this is the money chart right here. This shows you 20 years of a specific county in America. The blue line, just to go back a second, see that big line here? This is the blue line for the whole country. If I go to 20 years, that is the blue line here as well, only the last 20 years though. So you can see the boom, the bust, the recovery, and then you see the state. The state of Georgia is the black line. Then you see the green line, which is the county of Fulton. And what we do when we try to pick winners is we want to get a feel for two things in the market. There are two things that when you combine them, they become ROI, return on investment. And it's the yield on the property. So how much money you make in profit when you collect your rents and pay your expenses. That profit compared to how much money you put in is your yield. So if I paid $100,000 for a property and I made $6,000 in profit after all expenses in that year, I made a 6% yield, right? But that's not where it ends, because then you have to figure out, well, how much did the property appreciate, right? If it became worth $103,000 the second year, I made $3,000 in equity and I made $6,000, so I had a 9% ROI in that year. And the power of those two things together is really why your uncle, who you witnessed make a whole bunch of money in real estate, the reason why he did that, or your grandma, the reason why they made so much money in real estate is because of the combination of making a yield, generating income along the way, combined with the property becoming more valuable every year. And nationally, properties became 3.44% more valuable every year on average for the last 20 years. And that's with the boom and the bust all baked in. So what I always find really fascinating here is that because what we witnessed at the end of, with the housing boom and bust and then the recovery is the market fought its way back, right? That was the whole idea. When I witnessed this and we were right in the middle of it all, what happened was it got knocked over and then it fought its way back right to where it kind of wanted to be all along. Let's see, I'm checking. We have any questions coming in? Hey, we got some people checking in. That's cool. We got a good sized group watching today. So thank you for being here. I did this on Friday, by the way, on purpose because I'm cheating a little bit. I'm hoping that the way you feel on Friday is like really good because like the week's going to end. You're going to go have some fun this weekend with friends and family. I'm thinking maybe you're trying to kill some time at the end of your week and I'm going to help you do that. And then maybe some of that good, warm, fuzzy feeling you have about Friday rubs off on us and you look forward to the Rent Estate Live broadcast every Friday at 3 o'clock. You are permitted to mix a margarita while you watch the show if you want to. I don't think anybody would mind. I certainly wouldn't. So back to real estate. So the green line, look at the blue line. When this begins to deviate from the trend line, what I do is I start in the beginning of this line and I split the peak and the trough, split the high part of the curve with the low part of the curve, and then carry that forward. And what it shows me is the market is just about caught up. The recovery nationally is just about caught up. If I go to the county of Fulton, and you see a very gradual and definite trend line in the first third of this chart, and then it catapults down, and then it fights its way back. But if again you begin here in the beginning, split that peak and trough, carry the line forward, it's right there. The markets are like basically totally recovered. You know what? Let's give Noel a call. I see Noel is a person who wants to ask a question. So let's take our first question in a moment. But what I'm going to do is I'm going to bounce through a couple of markets. Take a look at this. Again, split the peak and trough, see where it ended up. Let's take a look at Tampa. Green line. Big party, big hangover, and then recovery. Start here, split peak and trough, and it caught right back up again. Okay, so the question is it going to keep going up at that pace? My answer, probably not. It's probably going to level off. I think it's found its way back to where it wants it to be, and now it's going to level off. I think that's great. All right, Tampa, is he ready to go? Let's dial him up. So here's Noel. Noel, we'll find out where Noel is from in a second. He can ask his question.
Hello.
Hey, what's up, Noel? You got to mute your computer while we do this. How are you? How's it going? Good. Where are you calling from?
I'm calling from Colorado.
Awesome. I love Colorado. So what is your question?
So my question is, what is your opinion on investing in what would be considered a high-cost market, or in areas where it's lower yields but higher cost properties that might be maybe a safer long-term investment as opposed to a higher yield or riskier investment?
Yeah, I love that question, and here's why. A lot of people, professional investors included, think it's all about buying the yield, meaning it's all about buying the income, and a lot of times it's because they don't have a real reasonable way of judging how the appreciation is going to go going forward. But when you see a high price market, what you're seeing is a market that has won, right? A market that has succeeded. And our philosophy here is that where you invest is much more important than what you buy once you invest there. So follow me on this, right? We're talking. You said you're in Colorado.
Yep.
So what market are we talking about in Colorado?
Denver, for example.
Okay, so as we talk, I'm going to go and pull up Denver on our site real quick here. Bear with me because this is where it gets real specific. So Denver is a phenomenal real estate market. We picked Denver as a winner in my book. I wrote a book. Just I'm not plugging it because I don't care if anybody buys it, but 2009 crash boom, because we believed the housing market was going to come back, and we picked some winning markets in that book, and Denver was one of them. And so I'm pulling Denver up right now, and I want to show you that same chart. Again, this is all free on the website for anybody who wants to use it. So here's the price performance in Denver. So back in 2011, I went on TV and predicted this market was going to take off. That was right here. So I'm not bragging about that, but I want you to know that I kind of know what I'm talking about. And it was all based upon this. So Denver was chugging along, and then all of a sudden Denver began to take off. It almost didn't participate in the housing crisis. So where is more important than what? My philosophy is spend the energy focusing on where you want to buy, right? The house is the instrument through which you make the investment, but the investment is Denver. That's the thing you're buying. I mean, literally, it's not a figurative philosophical thing. You're buying a piece of Denver, and the single family home is the basic unit that you buy if you want to own more Denver, right? So if you bought Denver here, in 2011, you caught it right before a really precipitous increase in price. So the question becomes, what is happening or has been happening in Denver for the last 10 years that's been good and has caused people to want to go there? And you can't just say weed because that just happened a couple of years ago. So you live near there? Tell me what it's been like. How long ago did you move there, first of all, Noel?
Well, I grew up in Colorado, but I moved there just about 5 years ago. But it's been blowing up, especially in the tech scene. Interesting.
Why did you go?
Population has just gone insane, the amount of population.
And why do you think that is? For you and your friends, why did you move there?
The mountains.
Because of the mountains, right? And so the lifestyle, and so the fresh air, right? Do you know a lot of transplants that did like what you did?
Oh, absolutely.
And was that their driving reason also?
Yeah, to get into more of the open areas, to have more job opportunities, less urban, more I don't want to necessarily say suburban, but just nicer areas.
Yeah, well, that's one of the things. So if you're thinking about Denver, here's what I see in Denver. I see a new trend line established, and if you look real close, it's just starting to. It went steep like a bullet, not real steep, not crazy steep, and then it started to level off a little bit. And I think what you're looking at, if I take my same analysis, establish my trend line, going historical, and just the peak and trough there's barely a peak and trough here. Which, by the way, important to note, Denver didn't fall for the housing crisis. It didn't fall for the housing boom. It didn't fall for the housing bust. I don't know why that is, but the population growth was so strong. But there wasn't a frenzy there. You don't see a buying frenzy during the housing boom here. But then if you carry that trend line forward, we're above the trend line right now. But just like clockwork, the trend line is starting to level off a tiny little bit. And I think it's going to continue to go in this general direction. So you're going to get a lower yield because the market has been so successful, but you're going to get continued price appreciation. And the average in Denver has been 5.12 as compared to the national average of 3.44, which is, it's only a point and a half, but it's a big gap. That's a 40% increase in the appreciation rate over that, over the rest of the country. And that's happening now. So I'm a big believer in quality. And what you're seeing here is a market that is high quality. And the yields in Denver, like this is actually a portfolio that we have on the site. So let me just take a look at this particular property. This is a $4 million portfolio that was pulling in a 4% yield. So it was a total. Here's what you find. Yield, again, is the profit, right? Appreciation is the increase in equity in the property by getting more valuable. When you add them together, it's basically the country is like a 9. And so when you see anything better than a 9, you're doing fine. If you see something better than a 10, you found a real winner. And these things play off each other. So usually when the yield is lower, it's because the prices have gone higher and because the rents haven't kept up, the yield gets pushed down, but simultaneously the values are going up. And so they interchange. You can go to Cleveland and you're going to see like a 7.75% yield and a 1.5% appreciation rate. And these things balance themselves out. Okay. Anything else? No?
Nope, that's great. Well, maybe some of the other markets like Colorado Springs and some different opportunities in the area.
Well, I think Colorado Springs is actually I'm glad you asked that question. I actually know we have something in there as well. Let me just pull up Colorado Springs really quick. And I say really quick, easy for me to say. Okay, Colorado Springs. I think, a lot of the Wall Street folks have asked us recently to show them markets where that haven't popped yet. Like if Denver popped, Denver's great, but is there anything nearby that hasn't popped yet that shares similar fundamentals, but is not already off the charts? Okay, and I show you Colorado Springs. The average is 4% instead of 5%. The green line shows a very, very similar thing to what Denver did, all right? But it didn't take off as steep. And so my question is what's been happening in Denver likely to rub off on Colorado Springs or Fort Collins or some other place that's kind of a satellite city outside of Denver? My guess on that is that, yes, that will happen. I think you're seeing the beginnings of a steeper growth curve in Colorado Springs. Same fundamentals. It's in the foothills, outdoor lifestyle, healthy lifestyle. And by the way, I made the joke about marijuana. The truth is that what Colorado did by embracing that industry, doesn't matter if you like it or don't like it socially or sociologically or politically, fact is that a big industry that's going to be a monster has set up shop in Colorado, because while other governments that were sort of friendly towards it were sort of thinking about it, Colorado jumped in and went all in. And infrastructure is being built in Colorado, and that's going to be the home base. So like the financial district in New York, entertainment industry in Los Angeles, weed industry in Colorado, that's real, and that means jobs. And so when people have the combination of job opportunity overall, you mentioned tech, okay? So job opportunity that appeals to young people, and it's also got kind of like the best lifestyle, one of the best lifestyles in the country. You've got a winner, and we're all about picking winners here, and nothing that I just described is slowing down. It's only accelerating. So if I had one stash of funds to use to buy, I think I might actually go to Colorado Springs, because I think you're going to see it bump a little bit here, and you probably get a higher yield because the values haven't gone too crazy yet. Does that make sense?
Yep.
All right, man.
Makes sense.
Hey, Austin, thanks for calling.
You bet.
All right, bye. All right, so let's see what else we have here. I'm going to put my face back up. Oh, yeah, let's call Nikki. Nikki, do we have a phone number for you? Nikki's asking about Charlotte, so I'd love for Nikki to give us her phone number if she could, so we can call her and we can talk. But let me pull Charlotte up for you and discuss it. I live in Charlotte. We're up here in Mooresville right now, and I'm buying in Charlotte. All of our Wall Street clients are buying in Charlotte. And do we have Nikki's phone number? All right. This is fun.
Hello.
Hi, Nikki. It's Greg Rand. How are you?
Doing well, thank you.
Thank you. Thanks for giving us your phone number to call you. We promise we won't bother you after today. So you asked about Charlotte. What's your question? Just in general?
Yeah, I was just wondering if you can do the same analysis for Charlotte, North Carolina, as you just did for the Atlanta area, the Fulton County.
Yep, Fulton County. Okay, I got to try to find Fulton County.
But Charlotte is Mecklenburg
Charlotte,
County.
Mecklenburg. Yeah, I have Mecklenburg, and we could probably find somebody in the room here. Maybe could put together a Fulton County. But yeah, I'm part of that trend. Are you born and raised in Charlotte?
I'm from North Carolina, but I currently live in Maryland.
Okay, so I'm one of those New Yorkers that are crowding everybody out down here. So sorry about that.
Okay.
I've been trying to shut the door behind me, but people keep seeing how much fun I'm having on Facebook. Yeah, so Charlotte is one of the big southern cities that is just on a roll right now. And it's based upon, the whole roll it's been on has been based upon jobs coming in from the expensive, high-density markets in the Northeast and the upper Midwest. That's been going on for decades, so you know that. The financial industry has set up shop. There's an announcement every week or so in Charlotte of a new company moving in and bringing in 300 jobs, 200 jobs, 150 jobs. Amazon just got approval not long ago for a 2,500 job distribution center, which is great, which means that two things. One, 2,500 jobs, usually jobs, where people are going to make between $40,000 and $65,000. So a lot of renters in that group. It also means that I'm going to be able to get things delivered to my house same day, which is wonderful for me. And so the question is this. Now, here's the data, all right? So the blue, every time this chart comes up, you're going to see the blue line looks a little bit different. Oh, wait, I got to show that. Hang on a second. I'm not showing my screen. Here it is. The blue line looks a little different because it rescales the chart. So if, in the case of Charlotte, it was much more of a gradual thing, and it was starting out at, it was lower price. So the curve looks more dramatic, but it is the same data points. Charlotte's the green line. So Charlotte had a little bit of a party during the housing boom. As you can see, it had a hangover on the way back, and then it's been taken off, and it's been going up. And so same analysis here. If I draw my line across the trend line and carry it forward, I'm a little bit above. So the question is it going to melt down? My answer to that is no, because the only reason, even during the meltdown, it barely melted down. But there is no indicator of anything that's a bubble in Charlotte right now. You just got a lot of demand that the people are moving in. I'm looking out the window here, and I see traffic in both directions. Okay, I'd say I feel responsible for that as a New Yorker. But we're buying in Charlotte. I'll give you a little tip. When we go into so Charlotte's a winner. The whole Southeast U.S. is a winner. Charlotte's a winner. But where are there other drivers of demand that are making it go even stronger? And what pockets around Charlotte is that happening? I found a town called Belmont, which I had never heard of before, because Belmont had a train station, light rail train station being contemplated that would get people in like 15 minutes from the train station into uptown Charlotte, where all the high rises are. And I read that. I started paying attention closely to that. That's also when I found out that Belmont's about a 6-minute drive, a 10-minute drive from where Amazon's facility is going to be. So big check in the box of an Amazon economics driver, a check in the box of it being attached to Charlotte, but now it's going to be the easiest commute. I talked about traffic, right? There's no traffic on the train tracks. So the easiest commute from outside of Charlotte into the high-rise office buildings in Charlotte is going to be right in Belmont. So I'm buying in Belmont this year. So that's the idea, is that you find a market that's good, and then you try to go within that market and find some other little nugget of intelligence that you can discover that tells you that this spot over here is going to go up a little bit faster. So Charlotte overall, 2.8% nationally. I'm sorry, 2.8% average over the last 20 years. We're nationally 3.4. So Charlotte has not performed as well as the rest of the country. I think that's going to change. That's why I'm buying, and I think Belmont's going to be one of the places that probably winds up seeing 4.5% to 5% appreciation over the next, most of a decade, because it's going to become the most popular suburb outside of Charlotte.
Oh, okay.
Does that make sense?
Yes, it does.
Could you mind sharing what you're thinking about doing? Are you considering making an investment down here?
Yes, I am.
Awesome. Well, that leads me to I have to tell you, Renters Warehouse, when they bought Own America, my company, Renters Warehouse is a property management company. My company was a real estate investment platform. We are now together, and we're America's first real estate investment company, where we can help you identify the properties in the markets like I'm talking about here, show you the properties, sell you the properties, and then manage the properties for you. So if you live in, I think you said Maryland, right?
Yes.
We can manage the property for you, meaning we can get the tenants in there, we can collect the rents for you, we can send you the checks, We can do the accounting and basically handle the maintenance requests when somebody has something that breaks in the house. So anybody like you who wants to invest someplace different than where you live, we're here for you.
Sounds good.
Okay. Anything else?
No, I just have to say I currently use Renters Warehouse here in Maryland for a rental.
Great.
And I've been very satisfied.
Wonderful.
I think I'm in the second year of the contract, and I've been happy with the service.
That's awesome. Well, thanks for saying so. Okay. Have a great day.
Thank you.
Take care. That's fun. We got more coming through. All right. So if we got more questions, just keep bringing them in. I'm going to keep showing you more of these slides until we get the next. We got the next one coming in. Okay. Oh, Nashville. Awesome.
Hi, this is Ankur.
Encore, this is Greg Rand from Renters Warehouse. How are you?
Hi, Greg. How are you?
Great, great. Thanks for putting your phone number in and being willing to come on and talk to us. Where are you calling from?
I'm calling from Nashville, Tennessee, and I have 2 properties with Renters Warehouse, and I'm so happy with the service.
That's great. I love hearing that. We're not even preparing that for everybody, so that's great news. I'm looking for Nashville. So how long ago did you start investing in Nashville?
About 2-3 years.
So you won, right? Nashville's been doing real well. I've actually got it on the screen in about 2 seconds here. So let me blow it up on the screen so everybody can see it. Yeah, Nashville is another one of those rocking southern cities that's attracting people from all over the place. If you look at the green line here, you can see that it really took off. You caught it right sort of in its trajectory upward. It is above its trend line right now. So the question is what's going to happen next? What we're sensing is that your general question, what I think of Nashville, or is it something specific?
I'm looking for like a Franklin area.
And that's nearby? Is that a suburb of Nashville?
It is.
What county is it in?
It's in Williamson County.
Williamson County. Cool. So I've got Davidson County on the screen here. And because we've got people watching live, I don't want to take the time to go in there. Maybe Andrew can pull something together and let me know. I can pull it up on the screen for what it was. Which county again?
It is Williamson.
Williamson County. So we'll see if we can get that together for you and show it to you on the screen. Yeah, one of the things I was saying earlier is that when you see a market like Nashville that popped or like Denver that popped already, is there anything else nearby that is similar fundamentals, but maybe a little bit further back chronologically in its explosion? Like the market is doing so well, but it hasn't gotten there yet. Tell me about Williamson County. Is it really close? Give me some background on it.
So you're asking me?
Yes.
Okay, so Williamson County is one of the really good suburbs, well known for its schools.
And this, how far out of downtown Nashville is that?
It is about, I would say, 30 minutes out of downtown.
Okay, good. So it's on the outside ring, kind of.
Right. There's a Cool Springs area. There's a gallery there, and lots of new offices that are coming up. That has been big companies like CHS and MedHost and HealthStream and others.
So you're seeing jobs coming in. Do you have a sense of what the reason is why those companies are coming in? Is it general Nashville migration, or is there some anchor there? No pun intended on your name, Ankur. Is there an anchor going on? Is there an anchor in that market where companies are coming to try to be close to?
Right. So here, let me rephrase my question then. So just like Texas and Nashville has seen like a lot of inbound from other states. And I wanted to know if that trend of incoming traffic is on the rise or it has started to mellow down. What does the real estate market look like out there? Is it time to sell or should I hold on?
That's my favorite question. So first of all, what's interesting about migration to cities like Nashville and Charlotte and cities in Texas is that when the economy is doing well and companies are expanding, they tend to go look where they can expand. They want to do it cheaply, but they have the courage to expand because the business is doing well. So they expand and they go to places like Nashville to expand. If the economy turns, people and companies want to get out of expensive places like New York or California, and they want to get into places that are lower costs. And so there's a recession-proof nature to some of these southern markets because no matter which way it goes, they become popular. When money's flush, people want to expand, go down there. When money's tight, they want to shut down the expensive operations up in the Northeast and make their way down to some place where it's more cost-effective, both businesses and people. So that migration trend is like a glacier. It's not going anywhere, okay? It's going to keep going. It's going to get to a point where second cities, like I have Chattanooga in mind. Chattanooga is another Tennessee city that hasn't caught on yet, okay? It's catching on. It's really getting very, very popular. But if you look at the chart on the screen here, you can see that Chattanooga barely registered the housing boom and bust, just a flat line for almost 10 years, and now it's starting to pop, okay? And that's an indicator that Nashville may be getting a little more expensive, so Chattanooga becomes not at the expense of Nashville, but Chattanooga becomes the next Nashville, so to speak. From the standpoint of the market itself, if I were you, I would never sell anything, okay? And I say that, everybody should understand that my company lives and breathes on people buying and selling property, but I don't think anybody should ever sell. So 25 years from now, I guarantee you'll wish you had kept it if you can. Now, if you're going to take the money out and then move it someplace else and buy something else because you're trying to be dynamic and strategic about your investment strategy, well, that's great. Stay in the real estate market. There's no indication that we're heading into any kind of a housing recession right now. And that's an important point. I'm going to pull something else up I know I have in this slideshow. These are the kind of stories you see on the screen now that have been prolific in the media in the last year. And they're nonsense. And I'm not saying that because it's my opinion versus theirs. Here's one. Experts predict. They had a survey of something like 100 economists. So experts. I'm not an economist. They predict recession will hit in 2020. And they put economic crisis across the top of the story. That's unfortunate. That's not even a real newspaper story. It's just a piece of stock art that had put the word economic crisis, the words economic crisis up, and then you see experts predict next recession. But here's the problem. In the same subheading, it says nearly half of the experts surveyed said they expected a recession. Well, what does that mean, Ankur, when nearly half of the experts said one thing?
They're even out.
Yeah, and it means that more than half said something different. Right? So for whatever reason, and I'm not going to try to ascribe the motivation to do this, they took a survey and a smaller share of people said there'd be a recession. A larger share said there wouldn't be, and they ran the story that experts predict. So they found some experts that predicted it, even though more experts predicted there wouldn't be a recession in 2020. That gave rise to stories like this. Here's a story in the Business Insider. Americans stopped buying homes in 2018. That's not true. They've got an image on the screen here of a building collapsing, obviously trying to conjure up an image of a real estate collapse. It's really irresponsible. And what I want to make sure that anybody who can hear my voice knows is that you can't trust what you get from media when it comes to the housing market. You just can't trust it. These stories are wonderful examples. If you did a Google search for Zillow Recession 2020, you'll see 40 pages of results. Every media outlet in the world ran that story, and that story, again, says it right in their own subheading. That story was based upon a preconceived conclusion that their research did not support, and yet they ran the story anyway. So people are trying to figure out, is now the time to sell, and they're being impacted by stories like this. So when you're looking to invest, learn how to read the stats yourself. Find what sources you can identify that are reliable, right? Like I'm the guy who, if I see the market going poorly, I'm going to tell you, all right? It's important to me to be right. I've had a good track record of being right. And if I see something on the horizon that says it is time to get out, even if it's against my best interest, I'm going to tell everybody what I think, okay? So you can follow me. You can decide if you think that there are folks who will say, like when I ran a story like this on LinkedIn, people said, oh, you always think everything's going to be good. Well, I don't always think things are going to be good. I think they're going to be good for the foreseeable future because I know how to read the data. And I definitely don't believe people who look to try to create sensationalized nonsense like this. So don't sell if you think it's because the market's going to crash, because it's not. Does that make sense?
Makes sense. Thank you.
Okay, thank you. Appreciate it. Have a great weekend.
You too. Bye.
All right, so as we get the next caller teed up here, I want to show you guys the next article. This was from something called the Street Report. I don't even know who they are, but they got my email. So I get an email every morning with a bunch of articles, and their top headline was Fed could double rates. Now, I saw that. I said, what are you talking about? So I went to the article, and I couldn't find it later. They obviously found their error, and they took it down. But here's what the article said. The headline, Fed could double rates. The article actually said that the Fed stated that they were considering raising rates 2 times. So raising rates 2 times turned into 2 times. Like instead of doing it twice, they thought that that meant they were going to double them, increase the rates by 2 times, which is like the worst misanalysis of housing data that I've ever seen in my life, and yet it ran. Okay, so I put this out there because we're doing this Facebook Live every week so that we can share our understanding of the housing market. We've got really, really good data and information and experience that tells us what to do. All of our Wall Street clients that have the same data that I have are buying. Okay, they're buying as fast as they can. So it's a little bit like, you know how when the stock market plunges and people on Wall Street kind of love it secretly, because what it means is that people like me are going to sell their stocks out of fear. And so the amateurs like me sell at a bad time, and the professionals buy my stock before it pops again. This is a situation where the professionals in the housing market are buying. Now, you can't wake up in a cold sweat at 2 a.m. and sell your real estate portfolio, right? Cooler heads tend to prevail in real estate. But we've been treated to a year's worth of analysis where the market cooling off a little bit because it was a little bit too hot is being characterized as the beginning of a meltdown. And it's nonsense. It's not going to happen. Okay. So I say buy and never sell, accumulate and build a portfolio. Anybody else available for a call? Yeah. Okay. Who am I calling? Josh. What's up, Josh? Okay.
Hello.
Hey, Josh, it's Greg Rand from Renters Warehouse. How are you?
Doing well, man. How you doing?
Good, good. Thanks for putting your number in. You got a question for me?
Yeah, I was just I'm in the market for multifamily, 10 to 20, 30-unit property, and I guess I got on late. If you already went over which markets are about to pop or that are still good buys. I'm in South Florida, and everything's so expensive. I mean, it's $125 a door, $130,000, $150,000 a door. It's just like, that doesn't seem like a buy to me. The numbers aren't working. So I guess I might have missed the beginning if he named some markets that.
No, not really. No, you didn't miss anything. No, I didn't. I'm kind of going as wherever the wind takes me here. So, so that's cool. So, are you open to almost anything in the country?
Yeah, I'm open. I still want to live in South Florida. I have a lot of rental property in Houston that Richard Drake manages for me at Renters Warehouse there in Houston.
He's a great guy.
Which kind of enabled me to kind of retire on my cash flow here in South Florida. But I want to get bigger instead of single family. I'm trying to make the jump.
Awesome.
Multifamily.
Okay, well that's cool. So I'm a big single family guy, but obviously it's a kissing cousin to multifamily, and it's driven by a lot of the same fundamentals. So I'm going to give you 3 or 4 of my favorites and why. Okay, one of them is Denver. I'm sorry, not Denver. Detroit. Detroit some years ago was the only market in the country that I couldn't find a reason to love. All right, because every place in America generally is growing in population, and population growth means housing demand, right? So this is the only place that wasn't. This was the only place that was actually losing population on a year-over-year basis, and that scared me. And there were reasons for that. The auto industry was evacuating. The job base was eroding. The city of Detroit was corrupt. It was bankrupt. It wasn't going to be able to meet its pension obligations. It was a mess. And then a couple of things happened. One, the state put an emergency manager in charge of Detroit, went through bankruptcy, okay, came out of bankruptcy. So they cleaned up their pension obligation situation and their debt problem. They also cleaned up their corruption, not by electing a whole bunch of really non-corrupt politicians. They just took the power away from them for the time being and put it in the hands of a professional manager. But then things started to happen that were giving signals of the market coming back. Quicken Loans setting up shop right there and really investing heavily in downtown Detroit, take some of those blighted neighborhoods and turn them into something more positive. Big plus there. Getting a corporate champion like that buddies up with government and begins to spend the money to clean things up is a big plus. But that wasn't even enough. It was the renegotiation and the following through on the bankruptcy. And then we have the auto industry being coerced, muscled, bribed. I don't know what the right word is, but they're being compelled to come back to America, come back to Detroit. And so what's happening there now is there are announcements coming out every couple of weeks. I think I saw one last week, $3 billion investment by General Motors. They're doing electric cars. They're doing autonomous cars. So it's not just running back and doing the same thing they used to do. They're bringing in a whole new industry. And Detroit, you look at the chart on the screen here, it's got a negative 20-year appreciation rate. So it got really slammed. And I think if I was going to invest in Detroit, what I would do is buy the nicest property I could. I wouldn't worry about trying to get a deal on the property because you're getting a deal on the city. Does that make sense?
Yeah.
All right, so that's one. All right, I'm going to rattle through 3 or 4. All right, let's see. When it comes to Florida, I think the Panhandle is going to catch on. The Panhandle has done a very good job, along with the Alabama coast, of not letting anybody in the Northeast even know it's there. Like they literally intentionally are trying to keep a well-kept secret, but the secret is gradually getting out. As people look around and say, where can I find the climate, the quality of life, gorgeous coastline, Panhandle is one of those things, and it's nothing like South Florida in terms of the wild appreciation rates over there. It hasn't really happened there yet. So I like that.
But Renter's Warehouse isn't in the Panhandle, right?
That's true. I'm sorry. We do have a Tallahassee office, but
Oh, you do? Okay.
yeah, I'm just talking in general terms. If I was going to, I should be thinking in terms of the places where we are. That probably makes sense, right?
Well, I have to find if I'm going to buy in Detroit, right? I have to know I have a problem. I'm sure they have them.
Yeah, we do. We do have that. Yeah, we do. I'll tell you where my favorite market today that is really in the process of exploding, that is a Renter's Warehouse market, is Huntsville, Alabama. Huntsville, it's relatable to Detroit in that the auto industry has been there. Mercedes went in there 20-something years ago, set up an anchor for the auto industry. But then a couple of years ago, Mazda and Toyota announced a joint venture to put a big factory in Huntsville. So Huntsville is a place where most people have barely heard of it. It's just a nice southern town, small tier town. Birmingham is strong. Montgomery is strong. But I specifically like Huntsville because there's, like I said, the state is a winner. Alabama is kind of like 20 years behind Georgia and North Carolina in terms of catching on as a major southern city, and Tennessee, right? So it's the last one. Maybe Mississippi is coming up behind it. So I love that. And again, I would go in and look at that as, you can find something. Are you the kind of guy that wants to fix up a beat up piece of property?
It's hard being not there. If I'm going to do a big value play, then you feel like you got to be hands on and be there. But I'm not opposed to it necessarily. It just has to be the right fit. But I would look more for like a hybrid that has a little bit of upside on value and a good yield. That's not a total demo, total redo. But that's where the big people are making the big money. I mean, I get it. So
Yeah,
just looking for the right deal. It's so many factors. Houston's been so good to me, but man, it's top of the market right now. There's no deals to be had in Houston. I still think it's a great market.
Well, what's funny about Houston? So I've got Huntsville on the screen here, so I'll hit that one more quick time just to get Huntsville's yields are going to be good because the prices are low. Huntsville is a flat line.
Like that.
It's a 1.5% annual appreciation rate going back 20 years. It is not popped yet. It's going to pop in the future. So I'm going to look back here 5 years from now, and we're going to see this chart accelerating upwards. But I'll tell you something about Houston that I thought was. I went down and visited with Rich. We actually made it. If you go to our YouTube channel, it's the Own America YouTube channel. Is that what we call it?
It's Random Real Estate.
Okay, Randon Real Estate YouTube channel. We did a show that we call Real Estate Road Trip, where I actually go there. I rent a muscle car. I tear around the market in this car, and we look for a city like Houston. It's obviously done well, but are there pockets around Houston that are popping now that maybe are going to have extra liftoff compared to the rest of the city? And we discovered, what was it, Valley Ranch. You ever heard of Valley Ranch down there?
I think I have, yes.
Valley Ranch was dry, no booze, okay? And when you don't have booze, you don't have restaurants. When you don't have restaurants, you don't have nightlife. You have a quality of life element missing. So the real estate prices there were a little bit flat in Valley Ranch. Valley Ranch had some very visionary people. Like for years, I think they were trying to get the dry designation lifted, but they were going about it the wrong way. I guess they were saying we want booze, and it wasn't working. They came up with the restaurant initiative. Rich clued me into all this, and I drove there and drove it and saw it. The restaurant initiative said we need to be able to allow liquor licenses if we're going to have restaurants, and restaurants are good for quality of life. Well, that got approved. And so now it's not a dry town or county anymore. I think that market is going to I think it's been suppressed, and now it's going to accelerate. It's about 40 minutes due north of downtown.
Yeah.
Valley Ranch, and then so the houses that are $125,000 in that area, I think are going to go up at a much faster pace, multifamily as well, just because of that one factor.
Why do you prefer single family over multifamily?
Good question. It's because if you own multifamily, there's two major things. If you own multifamily and you decide that you want to free up some of your capital, you got to sell the whole building, all or none. So if I put $1 million into a multifamily building versus $1 million into single family, I could decide I need to send my kid to college. I may have a big tax bill I have to pay. I may see some other opportunity I want to take advantage of. I can peel off 1 or 2 units out of my single family portfolio, take that capital and do what I want with it. I can't do it with the multifamily. So that's one thing. It's just
the guy though just now that said never sell. Is that you on the?
Yeah, that was me. But I'm saying if you need to, because I have condos for both of my kids' college funds. So when they go to college in a couple of years, I may sell the property to follow through on the plan. I may not. I may hang on to it. But that
or
investment,
you just cash out, refinance, and then it's just a loan. There's no tax implication.
that's true.
On the asset.
That's true. Well, who's teaching who now, man? What's going on here? I'm supposed to be the expert. Kidding. No, it's good stuff.
Right now, with like a dozen single-family properties in Houston, I'm refinancing because interest rates just dropped. I'm gonna be able to pull out $250,000 tax free.
Yep.
And my payment is not going to be that much more, about $800 a month more. But I got that sitting in the bank, ready to jump on like a deal in Huntsville.
Yeah, that's great. So yeah, you could cash out, refi a multifamily building also. The other thing that I like about single family, I appreciate you bringing that point up, because you're right. We want to give the well-rounded advice here, and that is, if you want the capital, need it, you can refinance and pull it out. The other thing is that there's something really pure about single family in that it is, I consider it to be the base unit of investment through which you take a position in the town. So if you wanted to buy Huntsville, Alabama, buying a house and buying multifamily anchors you there. But with multifamily, if there's some time in the future where you think it's the right time to sell, you decide you do want to sell it, you got to find somebody who thinks it's the right time to buy. And it might be that for reasons related to not just pure population growth, but something else might be going on where it might be harder to find a buyer of the multifamily. Where single family, the buyers of 80% of the houses in America, 8 out of 10 purchases every year are home buyers. And they're not buying because of the economic situation. They're buying because they got married, right? They're buying because they had a kid. It's a lifestyle decision. And so
definitely there's more chances of selling, and there's more market. There's always a market for single family because starter home, first time home buyer, all that stuff.
Right. And so the value of the property, if you do want to sell it, or just if you're counting the money, or if you want to refinance it, is attached to something that is, it's like an emotional purchase, which isn't usually a good thing. But when I say that, I mean it's a personal decision. People are deciding to buy, and so that's it. It's the idea that there's always a fork in the road in the future. Whenever you want there to be, do I sell this property to, or is the value of this property being supported by investor interest? In the case of single family, it's usually supported by home buyer interest. And when the economy goes well, it's more supported by home buyer interest. And if the economy goes badly, it winds up being more supported by investor interest. So it's kind of a two-headed coin that you always wind up being in a good spot.
So let me ask you a quick question. Are you a Renters Warehouse employee or what? What's
I am.
the angle here?
Yep, I'm an employee now.
Okay, all right. So you're just helping out and building goodwill for the Renters Warehouse customers? By
That is
doing
correct.
This weekly thing, or is there something else happening?
I'm trying to get internet famous.
Okay.
No, I think in today's modern age of marketing, it's media. You produce content, you try to be informative, educational, entertaining, put some personality behind it. So we're just doing that. We're just trying to give people the beauty of what we've done in my company that Renters Warehouse bought. So now Renters Warehouse is that we've shined the light on how well single family performs, and it's spectacular. People who sold real estate for the last 50 years only consider it a home. So the industry that would have been the one to reveal the true nature of this asset class just never did it, never cared to. Realtors, I mean, right? They never treated this thing as an asset class. That's a new idea. We're right in the middle of it. We've been up to our ears in this whole trend for 10 years now. And we're trying to just kind of show people the truth about how well it performs. And we know that lots and lots of people out there kind of know it intuitively. Now we're going to show them with the numbers and the charts, but now we also have the ability to manage it for them because I couldn't do that before. So one company helping you do the research, understand the nature of the asset class, helping you execute on your acquisition program, and then handling all the management for decades into the future. That's a first of its kind of thing. So we're just looking to share the word.
Yeah, no, that's a great thing. Single family's been great to me. I'm thankful I started doing it 20 years ago when nobody was talking about it either, or I wouldn't be sitting down here in the Florida Keys looking at the ocean right now. So it's been a blessing, but I didn't know if as Renters Warehouse is growing, is there going to be a segment or portion of it where they will help you find your next asset, almost like I guess that'd be kind of like a real estate agency or something.
Yeah, that's it. That's my division. That's what I'm doing here. So we have trained and certified all of our real estate agents, and we're adding new ones every day to the roster. We've created a new category of real estate agent, which is an investment advisor in real estate. And so the experience that's happening today, and it's going to get really good over the summer when some new web features come on, is that you hear a show like this. You go to the website, you start doing your research, you start playing around, you create fantasy portfolios, you begin to learn about the markets that you're interested in and learn about other markets. Then you make contact with one of our advisors. They sit down with you, talk about what's your plan. You want to be on the beach? How many years until that day comes? Let's help you do it with single family real estate. We then show you property, sell you property, and then manage it for you. That's the whole thing. So that's happening. Literally, that went live like 2 weeks ago.
Well, yeah, man, in that top market you mentioned, I mean, if you've got somebody at the Renters Warehouse office in Huntsville, Alabama that can start bird dogging and looking, even a fourplex I would be interested in, but more so the mom and pop, the 10, 12, 15 unit that maybe they've sat on it for a while, they're ready to cash out, and you can still get a value, I'm looking. So
Okay, good. You know what we'll do is we're going to put you in touch with Nigel, who is our top guy there in Huntsville. I think we just put a 40 unit or $4 million portfolio in contract in Huntsville. We've been preaching on Huntsville a little bit lately, and so we have a lot of traction in the market right now. We got some really good people on the ground, so let's make that happen.
There's something on your website. I guess a couple of years ago, Renters Warehouse sent a TV crew out to me in the state. They were blowing that up. They did a little, maybe like a 2-minute thing.
Was that right?
So you can see who I am or whatever. But I should still be somewhere in the website under the Rent Estate Rock Stars.
Okay, cool. Yeah, let's look that up.
But thanks for your time, man. I appreciate the call, and definitely I'll look to hear from Nigel. You got my cell phone, or Richard Drake has my information.
Awesome.
He's supposed to be looking out for me there in Houston if something pops up. But like I said, it's so overbought right now. I mean, it's high dollar.
Okay, good.
So,
Well, thank you. I appreciate the call.
thanks, man.
Have a great weekend. That was George W. Bush, wasn't it? It sounded just like him. Did you notice? All right, who we got here? John Michael. All right, John Michael, we're calling you. We're at an hour. Hey, John Michael, it's Greg Rand from Renter's Warehouse. How are you?
Hey, I'm doing well. How are you?
Good, good. Thanks for giving us your number. What's your question?
Yeah, actually, it's kind of a small market, but I was wondering if maybe you knew anything about Wilmington, Delaware.
Wilmington, Delaware. Let me do a quick look here and see. Do we have any Wilmington, Delaware on the site right now? Give me 1 second. Tell me about what are you thinking? You live in Wilmington?
Well, my sister just bought a house, and it's right in the middle of the city, right in downtown, and it was only $75,000. And which you can't really get that in most cities. But the thing is Wilmington never really revitalized from the 90s like most cities did. So they're trying to revamp the area. They have this new thing called Market Street, which is kind of their main street. And they're putting a bunch of new apartments there and condos and getting, trendy restaurants like Starbucks, Panera Bread, and such. And I don't know. I was just wondering if maybe if you knew about it, if you thought it did have a chance to revitalize, or if it's just a waste of time.
We are in the process of doing an analysis of Wilmington. They're going to give it to me in a minute, so I'm going to banter with you and just kind of get a feel for your situation, and then in a matter of moments, I will be able to give you some more details on that. So tell me, if you're thinking about making some investments there, because you're thinking the right things, by the way. The question of is if a market is cheap, but now it's catching on, like what's the deal, right? Is there an opportunity there? Starbucks is an interesting indicator, because they pretty much go anywhere and everywhere, but they don't pull out. And so, they've got some people that have a lot of research data that says that not only is this a place where there's enough population and there's enough demand for $6 coffee, but the hipsters may be coming. Like there's a youth, and hipsters are good, man. Hipsters, they go into neighborhoods that need to be turned around. They like the edginess of it all. Are you by any chance a hipster, John Michael?
Maybe a little.
Do you have a man bun, John Michael?
No, I do not.
Okay. I'm going to do a little bit of research on this right now. Andrew, you give me the flag when you're ready here. Okay, cool. So would you be doing this as a long-term play? Like what stage of your life are you in right now? How old are you?
Yeah. No, I'm young. I'm 26 right now.
Great.
Yeah, no, I just want to rent it out, really. Just make some passive money if I can.
Okay, that's awesome. That is the way to do it. So I've got a portfolio that I'm about to pull up right now. Here it is. All right, so I'm going to pop this up on the screen and talk it over with you. So here is, it's showing up as Delaware secondary market, but it is in Wilmington, and I'm going to go to the market data. So what do we see here? Interesting. Okay, so Newcastle County, Delaware. Is that the county that you're talking about?
That's right, yeah.
Okay. So you see, again, the blue line is the United States. And it's interesting because it kind of, both the state of Delaware and Newcastle County started off really close to where the country started off back in 1998. And it kind of rode a very similar trajectory. It got a little steeper than the rest of the country. And so it had the party, but not as bad of a hangover. Look at that. Like it didn't come down as deep. Where if you look at where they started, it was very close. You look at where it peaked, it's also pretty close. And then where it troughed is substantially higher than the rest of the country. And so that's an interesting thing. That's the kind of thing that makes you ask, okay, so now what's going on there that made it? There's only a few places in the country that this chart reminds me of, and DC is the big one. So how far away is Wilmington from DC?
It's about an hour and a half, but it's really close to Philly. It's 45 minutes and a train ride to Philly.
Interesting, because when you start getting into the upper Midwest, the Northeast and the Mid-Atlantic, you've got a lot of big cities that are populating that coastline coming down, or a little bit inland. So New York, Philly, DC. You got Baltimore tucked in there. The smaller cities that are in between the big cities sometimes get elevated and lifted by those big cities, because the big cities are expensive. People and companies want to move a little bit further out. So like a company that moved out of DC or out of Philly might go 45 minutes out, which means now an hour and a half out is commutable to that company. Does that make sense?
Oh, absolutely. And Wilmington is most companies actually have their capital in Wilmington because of the tax rate, as well as a lot of people are moving to the state because people from Pennsylvania, they don't want to pay Pennsylvania's taxes. so they just come right across the border and take the train up.
That's really cool. So that's interesting. So there's the two-step, right? So company moves out of a major metro, people can commute a little bit further out. It kind of extends the reach of that metro area. What you've got is DC coming from one direction, Philly coming from the other, and you're right smack in the middle up there. But if it's more advantageous tax-wise, then you got to look at, if you're investing in the market, like I've been saying, right? It's the house is secondary, or the property is secondary to the place. The place is in competition with other places. So how does it stack up, right? So when you've got a place that's drivable, like people leaving New York and going to Florida, that's a big haul. You have to move, you have to pack up, you've got to fly, you're away from your family. But when you've got a place that's drivable to those major metros, it almost kind of fills in the gap. Like you've got two bookends, DC and Philly, and they're squeezing in towards the middle. That could be what explains that this chart is just identical to the way DC looks. And DC, New Yorkers think that New York's the center of the universe, but actually DC probably is. And the way that market performs, where this market had all the fun, not that much of the hangover, and has maintained a 4% annual appreciation rate for the last 20 years, which is above the national average. And the yields on this particular property, which is just one property we analyze, is in the 5s. So again, like I said before, you wind up in the mid-9s. But I like it. Based on what you told me, I like it. I'm going to dig in a little bit more. But it's kind of the fundamentals, which is what I focus on, that we just talked about. This is attractive. I'd never seen this chart until now because I never focused on that market. And there's a lot to like on this.
Yeah, that's the thing. Everyone seems to forget about it, but it's getting a lot of attention recently from people who are getting priced out of the bigger cities, like you said.
You know what I would do? If you wanted to go and spend some time with your sister and do some hands-on, boots on the ground research, the kind of things you can do is do a Google search. I'm going to do it right now on the screen. I'm going to go to Google, and you can set an alert for the term Wilmington, Delaware approves. Okay, Wilmington, Delaware approves, and you see what shows up. The budget is approved. The city council approved $126 million. That's the budget again. Zoning approves landmark plan to consolidate 5 Wilmington schools. This is where, look at this, Delaware approves $3.4 million in grants in downtown development. When you see a lot of results for approves, what you're seeing is a government that is giving the green light to companies and developers to do things. So read these, right? They will probably have planning board meetings, review board meetings, whatever they call it there, where people who are either elected or appointed get to decide if things are going to get approved. You can show up for those. They can be boring, but if you're a real estate geek and you're getting excited about this, they can be really cool, where you're there. Like when I talked about in Charlotte how there was a train station, I got a whiff of them proposing a train station. So you could do Wilmington, Delaware proposes also. They proposed a train station. I went and found the website for the Belmont Planning Board. I read the minutes of the meetings where they were looking at this and when they were ultimately going to vote on it. And I didn't go, but I paid close attention. I knew what date it was going to happen to be voted on. And then it got voted on and it got approved. So that's the kind of thing that literally nobody's doing, right? I mean, so you're not competing with Wall Street people that have all the best data on what stocks to buy. You're getting a sort of clued into a market that might be popping. Then you show up, and if you detect that the government is pro-development, that they know they've got something special and they want to try to capitalize on it, and they want to encourage development to make the quaint town get a foodie lifestyle, get cool restaurants, hip restaurants coming in. If they're doing those things, you could be the guy in the room that sees the way the planning board responds to those kinds of proposals, get a sort of human intelligence on what's happening there that can inform your investment decision, and you can be one of a handful of people that actually know it. Does that make sense?
Yeah, that's exciting when you put it that way.
All right, cool. So when you go do that, keep in touch. All right, my email address is grand@renterswarehouse.com, grand@renterswarehouse.com. let me know how it goes. I'd be really interested in hearing what your progress is, and if you have any questions, want to run past me specifically, I'm happy to help out.
Yeah. Okay. Absolutely.
Cool. Anything else?
Yeah, I guess I was wondering, maybe, do you know about Water Street Tampa?
Water Street Tampa. I don't know about it. Tell me about it.
It's kind of the same thing, except revitalizing downtown in Tampa. It's pretty exciting stuff. A bunch of they're trying to make it like really walkable and get more millennials interested in it.
Well, that's interesting. Tampa is a winner. Florida's a winner. Tampa's a winner. And if you find a place within Tampa, I'm looking at the map right now. So Water Street looks like, is it a beat up part of town right now?
No. It's right in downtown. They're trying to make it like their version of Broadway. That's how they put it.
Okay. And right now, what's there?
Well, it's still in their downtown, but the downtown's been kind of dead for a little bit. It's just really been in the last 4 years that they brought it up. They have they have a river walk right next to the river. It's all lit up.
Is that next to that stadium, the arena, or next to the arena?
Yeah.
Yeah, I'm looking at it on the map right now. That's interesting. They have a walk there. Are they going to build on the park that I'm looking at right here?
Hold on, let me see. There's a delay. Yeah, no, they're going to keep the park there.
Okay. And so they're going to do some development up and around this area here. Is that what you're saying?
Yeah. I've heard you talk about how Tampa is really growing because they extended the port. You remember saying that?
Yeah, for sure.
Do you think, is there any threat, because I don't know anything about this stuff, but if that's really how Tampa grew, is there any threat of Miami expanding their ports also? And then I don't see if that ever happened, why would people want to go under the peninsula into the Gulf?
Yeah, so what he's talking about is the Panama Canal expansion. So again, there's a mega trend where the Panama Canal has been around for 100 years, and the ships that could get through the Panama Canal were not as big as the ships that have been built since. Okay, so they call them post-Panamax. So the Panama Canal has a maximum size ship, which is about a third of the size of the ships that are being used now. And so when things came from China, they would land in Long Beach, California, and they would get put on trains and trucks to make their way to the East Coast. So they expanded the Panama Canal. That opened up a couple of years ago. And so while that was happening, all of the ports in the Gulf of Mexico and up half of the East Coast began to get into a competitive battle to see who could be the big recipient of all or more of that trade traffic that was going to no longer go to California. It was a lot cheaper to keep it on the boat, bring it through the canal. So the Panama Canal expands. The big post-Panamax ships can now come through. And Jacksonville did a phenomenal job of being ready for that. Tampa was also working it. I haven't checked in on Tampa in a while on that subject. But like what Jacksonville did was they got like approvals for hundreds of millions of dollars to dig because the chips are also deep, right? So they had to expand their port capacity. They did a great job. I think they're going to wind up doing the best job capturing on that opportunity. But Tampa coming up through the Gulf is also right there. And if I were you, I would do some research on that. I know you're not going to lose port jobs because of the Panama Canal expansion. It's only going to create more port jobs in every one of these ports because there's so many companies shipping from overseas, naturally from the Far East, coming all the way across that they're not all going to go to one place. Miami's going to get their share. New Orleans is going to get their share. Norfolk, Virginia is going to get their share. But I think I know Jacksonville and I think maybe Tampa was looking pretty good. Charleston's going to get a boost out of this also. So there's a lot to like about Tampa. So if you found a place in Tampa that's popping that you can get in on nearby, then you're drilling in.
Oh my gosh. No, I love Tampa. There's a plot of land. A plot of land is like probably 10 blocks from a ferry that'll take you to the beach. And I mean, there's nothing on it, but it's only $20,000.
Really?
And I'm like, I should just get that and hold on to it.
Well, that's, you know what, if you can get a piece of property that generates income, keep in mind that I like the thought, all right? I like the idea. But the reason why this stuff is such a great investment is you get an income and you get appreciation. And if you buy raw land, you're going to have very low taxes probably because there's no improvements on it. But if you could buy a single family home, walkable to any of that stuff, walkable to that ferry, now you're talking. So, again, you identify a piece of dirt, a place that's going to get extra lift because of all these circumstances, and then buy the nicest house you can afford in that place, then you're going to win. All right?
Yeah.
All right, man. Hey, thanks. Stay in touch, right? You got my email, grand@renterswarehouse.com. Tell me how it's going.
All right, yeah, I appreciate it.
All right, thanks for calling. See you. All right, let's do one more. This is Frank. All right. Frank from New York. What's that?
Hello,
Hey, is this Frank?
this is Frank.
It's Greg Rand from Renters Warehouse. How are you?
Hey, how you doing, Greg? How are you?
I'm doing good. Hey, we got a paisan on the phone.
Yeah, we do.
It's the one thing I miss about New York is my Italian friends. My wife misses St. Patrick's Day and the way they celebrate it, and I miss the paisan. So I'm glad to hear your voice.
Yeah, I'm born and raised here, and I'm not going to say it. If I didn't have kids, I probably wouldn't be here no more. I can't say that for sure, but my kids are older than me. I probably would have cashed out and went someplace that's warm all the time.
Where do you live
But
in New York?
I'm in Staten Island.
I was going to guess. Yeah, my uncle.
Born and raised in Brooklyn.
My uncle was the lieutenant of the fire department down in Staten Island, Richie Rand.
I'm a retired sergeant from the police department.
Do you know the name Richard Rand?
You know what? The truth, it sounds very familiar.
That's my uncle. Cool, man.
Yeah, okay.
So what can I do for you?
Well, I'm a customer of Renters. I have a place in Milwaukee,
Great.
and I have a place in Davenport, Iowa, and I'm getting a good 8, 9, sometimes 10%, depending upon maintenance of the place in yield. I know the appreciation is not like huge, but I'm more of a yield person as long as I'm not losing money with the property. I want to know, should I stay? I was very interested in Huntsville, what you were talking about.
Okay. So which market specifically? Was it Milwaukee or Davenport?
Milwaukee, yes.
Milwaukee?
I have a duplex in Milwaukee and then a single family rental in Davenport.
Okay,
And
cool.
I'm doing well with them. I love the business. And I think I'm more of a buy and hold person. I'm 60 years old, so I'm not. I love the income. The income is tremendous. I just want to know should I continue staying in those areas or should I look elsewhere?
Well, I'm pulling up on the screen here. I'm just going to put up so everybody can see it. I'm pulling up on the screen Milwaukee. Okay, so Milwaukee County. You're seeing the prices are low. Like the blue line is the U.S. So this is substantially lower than the blue line in terms of every year. The appreciation rate is only 2.3% versus national average. But if I look at this is what this is telling me is, well, first of all, Milwaukee, Davenport, I like your style because you're buying bedrock, right? You're buying places that are just they're not wildly hot in terms of all kinds of inbound migration and everything else. They're just as solid as can be, right? I got the breadbasket down in Davenport, and then Milwaukee. Just Wisconsin is not as flashy as so many other states around the country, but it's not going anywhere, right? The people that are there love it. They're not changing. I look at this chart, and if I do my same analysis, start at the beginning of it, split the peak and the trough, and carry it forward, I'm taking notice of this little pop right here in 2016 to 17. We're in the process, by the way, of adding 18 data. Oops, I kicked my camera. Adding 18 data. And I think I'm hoping what we're seeing here is a little bit of a trend beginning. That data is going to get loaded up in the next month. So check back and put your properties in the system so you can track the stuff and see the changes in the value. But, this is not going to hurt you. If you're getting an 8% yield, chances are, if you're getting 8 and the market is doing a 2.5, you're at 10.5. And so as long as it's fine. Yeah.
One of the things that not that you haven't talked about, but you also get a nice tax write-off from the depreciation of these houses too.
That's true.
Which adds to everything. you know, it adds to the overall number.
Yeah, no doubt. And we don't calculate that in here. But you're right. This is one of the reasons why, you know, so first thing is, I think if you want to buy more property in other places, I would do it, but I don't think you need to incur the cost of selling. You know, it's going to cost a commission to sell. It's going to cost you money maybe to fix it in order to sell it. We can sell it for you occupied. That's one of the big things about what we're doing is that, you know, 99 realtors out of 100 would tell you the only way to sell the house is to vacate it first. We don't do that. We keep the tenant in place. We sell it as an investment. But the reason I like this is that, like I said before, it ends up being a 9. Okay, between appreciation and yield, you're going to get a 9. Now, some people, the appreciation is more important. Some people, the yield is more important. But if it adds up to a 9, you got a 10.5, 10 and a quarter. So Milwaukee, not sexy, but plenty sexy if what you're interested in is a solid income and an ROI north of 10%.
That's the reason I got into it, was for income.
Yep. So I like it. I mean, if you want to buy something else, one of the cool things about what we're doing now also is that Renters Warehouse being in 41 cities, we have the ability to say, if you're in Milwaukee and you've got some bedrock right there and you want to try something that's got some sizzle, buy some Austin. Plenty of sizzle in Austin. The appreciation rate in Austin is very high and the yield is low. It ends up at a 9.5 or a 10, but you can balance your portfolio by playing this trend or that. You know, we just talked about the Panama Canal. You can play the energy industry in Pennsylvania, and you can and Oklahoma City. You can play the Panama Canal. You can play just general migration. You can. It's like as creative as buying and selling stocks on E-Trade, because you're playing population trends. And if you have, this is a real common sense thing. If you know people, and you have a feel for why people are going the places they're going, this idea of being able to own houses in different places, even different from where you live, and different from each other, you can mix a custom portfolio based upon your own intuition and do some cool stuff.
Yeah. Okay. No, I'm really interested in Huntsville. It sounded really like a good opportunity. So I think I'm going to contact, like you said, Nigel.
Yep.
And you manage in Huntsville, correct?
We do. Yeah.
Okay. So I think I'm going to contact him and start looking in that area because I want to buy 1 or 2 more before I you know what? I love it so much. I may continue to do it for a long time. And I'm a young 60. I don't know how old you are, but I'm a young 60. And I don't plan on getting old.
I'm an old 50.
and it's just like you said, I'm trying to build a legacy for my kids.
How old are your kids?
You know, and they're 20 and 17.
Okay.
You know, and it's not even. And don't get me wrong, I love the income. The income is you know, it's great. It's nice getting those bank transfers every month. And,
Yeah.
I'm definitely gonna, you know, still looking at Milwaukee and Davenport, but I want to explore Huntsville, like you said. I'm also going to take a look at Belmont.
Good. Cool. We're here in Charlotte too, so we can manage that for you. If you come to Belmont in person, look me up. Give me a call. We'll go have a cup of coffee.
Okay, I definitely will. What was your email address again? 'Cause I missed that.
That's grand at renterswarehouse.com.
Okay, that's what I thought it was.
And you can always get me through this Facebook page too. They'll pass your information along if you message them through here.
Okay, listen, I appreciate everything. Thank you very, very much.
Thank you. Take care, Frank.
Okay, bye.
All right. Hey, we're gonna have to pull the plug. All right. That was a lot of fun. So thank you all for hanging in here with us and for calling us. And sounds like people had a good time. So we'll be back here again next Friday at 3 p.m. Eastern doing Rent Estate Live. Really appreciate it. Have a wonderful weekend, and we will see you again soon. Bye-bye.